After 10 days of driving, we're finally back on the air. What are we talking about?
Endless things today. The two markets that I got my focus on are going to be soybeans, the two weak links I see here, and people aren't going to like this, but cattle. And the one market I really like is corn, but just not in the short term. So I've got my favorites here, and I have my least favorites, and we're going to go through those today.
A bullish John is always surprising.
Bullish corn John is always surprising.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, it's been a long time since we've done a podcast because I decided to get in a car and drive for 10 days.
Yeah, you were gone for 10 days. No editing studio was available to you. I couldn't even do one by myself. We have some guests coming in, so we had stuff planned. It just didn't work out, and it's been a while, but we're back.
We are back. And let me tell you, I went all the way to North Carolina, and I saw people doing field work, and the tractors that I saw in North Carolina,
yeah,
my lawn tractor is bigger. When they're working those little fields that are basically just rock, maybe it doesn't take much of a tractor.
Yeah, it's hard to know. Every region is a little bit different. Yeah, you got to watch. You obviously can see the crop growing. It's not growing. We have 3% planted in corn. So the official stats are underway, and it's being planted. Now here, where we had what was pretty close to a blizzard, we aren't going to be planting. It'll look like we're going to be planting. West central Minnesota is not going to happen, but you go south of us, Alexandria, and south of that, an hour, and guys will be planting wheat very soon. Things will warm up here. It's warm. It's a lot of places that needed rain are catching rain. So I wouldn't call it delays. I'd say a well needed rain before planting, and everything's looking set. Now that would usually weaken up grains, but what we've had going on here, and this is what we're going to talk about, is the money flow into commodities. Now, not just any commodities, food inflation, on fears that there's going to be a global food shortage. And we've seen this number before. When you had the Russian-Ukraine thing happen, it was obviously a little more warranted. They grew a lot of wheat in the region and corn, and they had no idea what was going to happen, or the port's going to get bombed. Was none of it going to move from Russia or Ukraine? And there was genuine panic at the beginning. This one, they're all net importers, and the oil is, and fertilizer would be the big story. So if oil and fertilizer goes up, grains have to go up, or so the investors think. And that's where this gets interesting. We've actually kind of had this happen once, not with the fertilizer, but more with the oil going up substantially.
Oh, is oil up?
Oil, yeah, yeah. You probably noticed that on the road trip. Oil, I think last I looked, it was 112. It's going to be we don't know yet. By the time you listen to this, we're going to know whether the deadline was passed or not.
We might not if the nukes get launched.
Yeah,
we don't know at all.
There's a lot of crazy talk, and we'll see what happens at 8 tonight. But the oil it's up $1.50. It was all the way up to 117. It's 111. But the argument is, if that prices have to go up, grain prices have to go up. And I'm telling you, there's never been that correlation ever. I don't know where this came from. Maybe 2008 when we went to $150 a barrel and ethanol was just beginning. Corn did go to $8.40 that year, and it went full carry, just like beans are doing, just like corn's doing right now. It went up. It wasn't bullish. The perception that it was going to get really bullish because of oil had corn go all the way to $8.40. So don't underestimate.
Yeah, but what was corn at harvest time?
It was $2.97. Or 97, but it wasn't that. It was the idea that we needed to buy grains because oil's going higher, and it didn't work at all. Like that trade, not only that, at that price, the world couldn't function and everything collapsed. Every time oil goes up, it completely collapses. Of course, they're saying this time's different, and maybe it could be. Anytime fertilizer's gone straight up, and chasing that market's been the wrong idea. But then you get on Twitter and you start reading, you're going to find anything you want. How this is behind no matter what they do because the natural gas in Qatar, that this isn't going to be online for 3 years and it's going to be, you hear anything you want. Panic usually has spikes in it. This is most likely a spike. We're going to know more tonight. But the grains have now started why marketing's been hard and why we've been quiet about it is that first it goes up, which it did, and then it goes down. Now the question is, was that all it had? Is that where the connection stops right now? Well, I think if oil were to go to 130 or above, that grains probably would get new life for a little bit. It still ultimately leads to lower prices if fundamentally people aren't buying it or demand isn't high enough or supply is too high. And that's where this one will lead to. Now, we'll break down really quick. The outlook for beans is not good, but that hasn't stopped beans from being very strong. But you're starting to get that disconnection from oil, where corn is where I want to spend a little time. I feel like the market's turning here and it's getting really bullish. The problem you have is you have a large supply left over, and they're not going to probably pay the farmer for that. And what's interesting when these guys invested all this money into the food is that they got 385,000 longs in corn, and historically like 450 is max. So they got like max long, and then the farmer in turn took the other side of it, producer. And that's why we really didn't go anywhere in corn. For all that buying, it went up very little. But the problem you have is there's still a bunch in the bin and they're not going to want to pay you for it. They're going to try to wait you out and not pay you for it. But beyond that, if this isn't a perfect crop this year, we're going to go backwards very, very quickly because the demand in corn, that is what's going to turn this thing. People aren't recognizing it that I'm following. Maybe a few guys are mentioning it, but it isn't now where corn's bullish. It's later on where it's potentially very bullish. And it feels like guys have marketed a lot at 26. And I won't fault the guy for that if it was profitable. But they're not realizing the potential of this corn crop and the price. We haven't seen any weather. We don't know what the acres are. Fertilizer is expensive. And if it isn't perfect every day like it's been for the last 2 years during summer, we're going to have a completely different market. And that's the part I don't think a lot of people are catching. So is John turning bullish corn? I am longer term, but short term, I'm not. I mean, if that's not too confusing, that's kind of where I'm at on it. What are your thoughts?
Well, I don't have a lot because I really ignored
road tripping.
I ignored the markets, and the one day we got back on Friday, the markets were not open. So I looked at some charts. I did some thinking. Not much. I ignored the markets for the most part. But
you didn't miss much.
I did notice the prices hadn't changed much. I'm sure there were variations throughout those 10 days, but they were very similar to when I left.
Very quiet.
In general, though, here's a couple things that I want, like, let's call this catch me up to speed from the last 10 days for the episode. But let's talk crude oil first, because I know you want to dive deep into that market and you've been studying it all day.
No, I've crude oiled out. I think everybody in the world is.
So I want to go back to February when they were crushing, and they were crushing oil every day, but it wasn't really going down. And we talked about the spreads. And at the time, front months were ahead of the back months.
Yeah.
Right?
Inverted.
And you got inverted markets, and you're looking at these are going down, but they shouldn't be. And then this happens. It's not like they knew or the spreads.
No, the spread.
But
no.
There were indications that something could change. Not to this extent.
It wasn't as bearish as what the market action. Yeah, the funds didn't like oil and they were selling it.
Yep. And that turned out to be wrong.
Very wrong.
So what are we looking at in grains from a spread perspective? Is there anything that stands out to you from the spread side? Either corn, soybeans, wheat. Because the one thing I did notice is that, wheat seems like it should be the choice if you're doing something for food.
Yeah, wheat.
They've been crushing wheat.
Yeah, wheat actually got inverted, I think, just a little bit, not before it even took off. No, let's talk beans. It is the widest carry ever for the month of March. It was negative 16, I think, most of the month of March. And it's only been down under this like one other time that I can remember. That is an indication of a very well supplied market. Horrible indication for spring. Just like in 2008 when corn was full carry all the way up, it didn't stop it from going to 840. But when they did pull the rug, there's no buyers on the way down. Same thing's going to happen in beans. If the end users are covered through June, the spreads are indicating that they very well might be. Like there won't be a bid on the way down. So these markets tend to fall very, very sharply. What makes them difficult is how high can they go before they do that? They can run you out of money. They can do a lot of different. Fundamentally, it looks terrible. Corn looks terrible. The March May wasn't that great, but it wasn't as bad as last year. The May July is not very good. You have a good amount of carry in there. And then July, December corn, there's like 19 cents. These are all very bad signs. And that's what I'm talking about. It isn't bullish now, but it's this constant demand that's going to be chipping away at this. And then we're going to stumble just a little bit in corn. And that's the part that people are missing, that how fast this can change. Now, yes, we could have perfect weather from day one again. We could plant 98 million acres, which I don't think is going to happen. But it also could be 93.5 million acres, and it could be 178, and then you have completely different numbers, and you're going to be very sorry that you were looking at that 460 price. And then, what can a guy do, short term to protect it? Do I want to run or buy puts? When you're buying 20-cent puts near the money with some time, and you're protecting a 460 price maybe in July, and by the time you're making money, it's 440. Could that work? Yeah, it would have worked maybe for 20 cents last year and maybe even the year before. But it's going to be very hard to make money on puts. Like if you get the high, buy it perfect and get out perfect, maybe you're going to get something. But when you're trying to protect 25 cents to the downside, that's very hard for puts to do. I was getting excited because corn was getting to levels where puts did make sense. And then, of course, we failed. A lot of guys had orders in the 490s instead of $5. They've learned over the years it usually falls a little bit short. So some has been marketed. But what I want to do is I want to look at calls on a large pullback here. Let's say these funds liquidate. I think that holding these positions in between now and spring, the end of spring into summer is going to be hard for these guys to do. And if they roll over on this, what I don't like about corn is it never went up with beans and wheat. So when it falls over, it could get way too low price. That's where I'm going to be on the long side of corn. If we get that opportunity going into spring, I want to own stuff going into the weather. Do I want to own it right now? I do not. And as a matter of fact, I got a lot of conversations with the guys that have the 470 September calls on what to do. Some guys have taken it off. Some guys have kept it. And everybody's kind of just held hostage by this market. Oil could go ripping, and I don't want to, you know what I mean? And then corn and beans could go ripping again. Every day that passes and that doesn't happen, though, like crude oil was up $4 today. And I about knocked my cord off. And then the beans and corn were down. So you're seeing this disconnect happen, and they were down quite a bit. So if you get the funds tired of holding these long positions and they liquidate, I think it's going to set up a wonderful opportunity for corn, quite possibly beans, depending on how low beans go. But that's what I think could happen. I don't like these long positions this time of year. If they built it into June, it would make me feel a lot better and it'd be a little more predictable. But now they've built it into April, these very large positions, which is going to make the direction of grains are very, very unpredictable. Meaning, are they going to buy more and protect their position, which they've been doing in beans for like a month now?
Yeah.
Are they going to
a lot?
Yeah, they have. And are they going to stay committed and try to push us higher into spring, into the weather? They got like 8 weeks to do that. That's a long time to do that. Or are they going to dump it and provide some getting long before the summer weather opportunities? I don't know. We'll play it day by day, but this has been a very difficult market because of all the outside influences that we've had on it. Everybody's got their hot take. If you go on Twitter, you're going to get very confused. Normally, you can get some news and you get some numbers, everybody's got their own opinion and numbers out there. Just follow oil. That's how well the negotiations are going or not going. But trying to market in this, and we talked about the last few episodes, market incrementally and a market that's going higher. I sent out to the subscribers. They got a recommendation on another 10% of November beans, and so far that's looking very good. And that's cash sales on new crop beans, or not, well, hedge to arrive on new crop beans. So far that number is looking really good. And that was 10%. I think we're up to 20% on that. So the moves I've been making are in beans. I feel like that's the market with the most vulnerability up here is November beans. They're going to argue endlessly what's switching to what. We won't know till the end of June. But there's a very good chance with these expenses that some acres could switch to beans. It makes a lot of sense. And again, if we have 93.5 million acres of corn suddenly with a 175 yield, which is still outstanding, the numbers are totally different for corn and the corn outlook. I'm very optimistic on the longer term outlook on corn. And I'm finding guys are very aggressive in pricing the longer term stuff. But the front, I'm a little worried that it's just not, there's too much cash corn out there to be able to rally right now, if that makes sense, without oil. So we've talked about a lot in, the oil market affecting that. And it's been hard just because, you wake up, oil could be up $15. And then of course it's like the Russia-Ukraine thing where you couldn't really short grains, but you knew these were prices that you wanted to short, but you were worried about the danger that you went to bed and they bombed the ports. It would go up substantially. So that's kind of where we're at on this. We'll watch and see how this plays out. If there's a peace deal, a guy's got to get aggressive on the beans, I think. But that's just my opinion. But that's where I see the biggest vulnerability right now is soybeans. And also cattle, which we'll talk about later. Those are the two markets that have me worried. I don't know. What are you seeing?
I agree with you. And I'm watching those spreads and I'm watching the market. And I think there's opportunity here, but there's not timing. And you need to kind of have both.
And it's impossible to do in this environment. Yeah, it's not easy to do when you don't have all the pieces of the puzzle.
You got to be patient and watch for the signal, whatever that signal might be.
And we haven't been putting out a lot of stuff because this is uncharted territory, really. I mean, we have some guidelines, but not too much. Of past history. And then again, if they're going to bomb and this is going to be a longer campaign and they destroy a bunch of infrastructure that involves oil, this all bets could be off. The one market's the scariest to the upside is wheat. Like that thing could take off. When they panic, wheat is the market that the world buys, like you mentioned earlier. So that's a market I'm kind of avoiding. If you're going to be in there, options is probably the best way to play that. But that one I would guess is going to be the most sensitive to the fertilizer stuff or these a lot higher oil. It feels like wheat is the one that would really run with that. Of course, we don't know that, but we have seen some past history that seems to be the one that outpaces everything else. So that one's just a plain scary market. Now, fundamentally, we have a very poor Kansas crop. It's in like some of the worst condition that we've seen in a very long time. And then the lowest planted since 1919. I mean, everybody's moving away from wheat slowly but surely. Ultimately, that'll set it up for better days. But again, back to the numbers. There isn't anything in Minneapolis wheat, Kansas wheat, Chicago wheat, soybeans. Anything in the soybean complex is all just hype. Corn is the only one with genuine demand, but a large supply. And I see that as the first market that fundamentally shifts, but we're just not there yet. So that's kind of my rundown of this whole thing that we got going on. And when you're talking to guys, you get phone calls. I mean, this volatility, you'll get phone calls. This volatility will be good eventually for selling calls. But now the volatility is kind of dying down. The price is dying down. But don't let that fool you. I mean, this market could wake up like that and take off. It's a very dangerous market and be very careful in it. And to say that it's over for sure, I wouldn't say that. But grains are looking a lot weaker. The calendar flipped over and they simply weren't buying anymore in April. And it's really that simple. But you have seen them rotate recently into cattle. So when they start focusing on stuff, cattle just went ripping, 6 days in a row. When they do put money in, they put tremendous amounts of money and really move markets. And cattle is the last one that they just put a whole pile of money into. Very volatile, very unpredictable. But again, it provides opportunity, just nothing super clear right now.
That sounds like the market's all spring.
Yeah.
I mean, yeah, it looks like way more than 6 days in a row for cattle.
Yeah, cattle's been a big surprise, and they put a large amount of money, and already they have a lot of money in there. But really, when you're stacking longs like they are in all these commodities, you saw what happened in gold and silver. Like, they will pop. It ends that way every time. Timing is obviously a big part of that, but all these markets that they just pile into now, you'll say the argument is that cattle are fundamentally bullish, which is true. But exports from Brazil and Argentina are picking up substantially, and they're going to pick up even more. They are bound and determined to get this price down, and they are going to export their way. There's not a cattle shortage in the world. There just is in the U.S. They're going to export their way out of this problem, import, I should say. And I know that's not what a guy wants to hear, but that's how commodities work. When you get paid a lot for your beef, by shipping it somewhere else, you're going to, and that's going to happen. It's going to continue to happen until it kind of fixes the supply problem. Also, we have the southern border that looks to reopen here very soon. So there's huge headwinds in cattle from here. This last leg up is very surprising. Cash looked like it was on the ropes. And then all of a sudden, cash jumps $10 to $11 because futures went up. And the futures allow hedgers to short 245 on the board and just hold up for 245 cash. It gives them a lot of leverage. But the problem in the cattle industry right now is the money. Like, you can't come out on these cattle. Eventually that's going to come home and be a problem. Like, it's a sugar rush still at the sale barn, and I'm happy. I just had some clients sold, and they got $1 million check. They're in North Dakota, and they told me they got $1 million check, and then after they sold their cattle, and then gave it to the banker. They were pretty happy. I'm happy for everybody that's happening to, but there is a lot of warning signs here, and this just feels like the last push, of a bunch of Wall Street money into this thing. And now the numbers really don't work. Now we have a whole bunch of beef. I think 118, which was the biggest kill that they've had in a while. And so you're going to get a lot of meat on the market. Now they got to move it all for higher prices. And the margins just aren't there for anybody. This thing is a ticking time bomb. And it's going to go up, but it is impressive. The strength lately has been very impressive. But the two markets that I worry the most for downside is going to be cattle and soybeans. Cattle just needs that catalyst, and I think it's going to be the border. They talked about it opening in 2 to 4 weeks, and next week will be at the end of next week. I think is going to be the 2 weeks, and we don't know if it's going to happen, but they definitely said they're gonna be looking to phase open the border again I think starting in Arizona, and then working your way across the rest of the border where the cattle come across. So those, hopefully you got something out of this. In a lot of confusing markets, in a lot of back and forth, we've seen a lot of money pour into the food inflationary story. And I personally think that's about done. But again, look who's running the country right now, and it's not the most predictable of things. Like, things can change very quick, and so you can't know with any certainty. But that's just my feelings that we're probably getting very close to tops in both those markets. Others will laugh and say it's just beginning, and that's fine. That's what makes a market.
That's what makes a market. I would also, you could make the argument that it's highly predictable, but no one believes that it would be that predictable of an administration.
Yeah, it is some. If you know his language, it is somewhat predictable. Applying that to markets is a little bit harder.
Well, because no one believes.
Yeah, he does say directly, like, we're going to get the cattle price down, and then it went down. Like he does tip the hand a little bit. Now we're up to new highs in some of the contracts, but they do talk about it daily, getting that beef price down. Midterms are coming up. It's brought up a lot in the news how expensive burger is. There's no doubt they're still going to continue to work that and try to get that down. So again, there's a lot. You can only read the tea leaves, and there's a lot of warning signs. In my opinion, like new highs are never bearish, for cattle, but there's warning signs in cattle and there's warning signs in soybeans. Those are the two markets that would have me the most worried.
Now it's just the timing.
Yeah, now it's just the timing.
The simple thing.
I have like 50 different trading setups if we can time it right. There's cattle spreads, bear spreads there. There's like at least 3 or 4 different ones I'm following. Bull spreads and hogs. You have all the grain stuff with options, especially soybeans and puts and all that stuff. And if you're bullish, obviously calls. Everything's really affordable. Volatility's come down. The problem is the timing. That's
the hardest part.
That is the hardest part. But this is a market that's going to provide a lot of opportunities. Hopefully we get some clarity and some stabilization for a few weeks. That would be a nice break. And then I don't have to watch oil every single tick of every day. Although guys are trading it, it still wears a guy out. I'm looking for some clarity.
It's fun when somebody wants to throw 20 contracts of crude oil on, though.
Yeah, yeah. No one does. I mean, there's people that definitely do that. No one's been doing that here lately, or ever really. 20 oil contracts is, yeah. You're looking for trouble with that. You can find trouble in these markets. There's no doubt. I prefer options in this stuff and spreads. But even they're not necessarily safe either. It's just a market a guy's got to deal with. I'm not complaining at all. I'm enjoying this volatility. It's giving guys very good marketing opportunities. There's absolutely nothing wrong other than it's just, like I say, wildly unpredictable day to day, the oil price.
I will say I've been watching crude oil options for a client, and
got any hot ones? Got hot trade?
No, I got nothing there yet, but I have found it interesting that over the last week or the 10 days that I was gone, the volatility has come down.
Yeah.
But it's only affected the puts. It has not affected the calls. The call skew is very high, which makes sense.
It does
the
make
global
sense.
Situation.
Yep.
But I'm shocked at how much the volatility has come down over the last 10 days, considering the situation doesn't seem to be any.
Yeah, it seems, and that's the problem with the news nowadays. You just get all this, these huge sensational headlines, and everybody's got a hot take, and it gets really confusing. And that's why I say just watch the oil market. That's your best indication of how well negotiations are going, not going, whether, you know what I mean? The oil, other guy, and then you get on Twitter and you'll be like, you'll see 20 guys talking about how I can't believe the oil market doesn't recognize how big a train wreck this is. It's going to go to 200 minimum, and they'll rattle off all these reasons. You can find endless guys that are saying that. And then you'll see that at every market top, though. Maybe it is going a lot higher, but I'm just saying you'll see a reason why it has to go way higher, and they'll lay out their thing, and then the market just tops and goes straight down. That's what I'm used to, and that's probably what you're going to see here too, including all the fertilizer guys. I'm sure they'll get ways to fix the situation we're in. And panic spikes tend to just be that, spikes. But what I found really fascinating is this food inflation story made a lot more sense with Russia and Ukraine than it does in the Middle East here. But, they did buy a lot of toilet paper in COVID too, and no one knows why people did that.
Right.
So you just don't know when people act irrational, what could happen. The irrational part is it's brought a lot of money into the markets, and in my opinion, provided wonderful marketing opportunities for some of the crop. And I think that's why you should look at it. So we'll see. We'll find out where the market's going to move a lot more. It's providing opportunities. Again, I have like 10 different things I want to do right now, but we just don't have any clarity.
Or money.
Or the
money.
Yeah. It does. You look at feeder puts, you're looking at $17, and take that times 500. That's what that costs. which is not cheap. And then you look at the oil, like you were talking about, you look at margins, everything's very expensive right now. That's very true. Keep your powder dry. I enjoy these markets. I don't like the reason why it's happening, of course.
I will say, like, if you do hit the timing right on certain markets right now, it could be very beneficial, but it's also like good luck.
Yeah,
I mean,
it is really difficult. And the grains, I mean, the calls aren't making money, the puts aren't making money.
right.
But you wouldn't find me selling calls and puts right now necessarily either. I mean,
It's your job.
no, the volatility. I'd rather buy volatility here than sell volatility. And there just isn't. There's just no clarity whatsoever. But it will be clear soon, as it always straightens itself out in the markets. But again, back to soybeans. I think that's where some of the bigger marketing opportunities are. And if you're convinced this is not even close to being done, like I said, look at combinations of like long wheat calls, long soybean puts. Like they're not all going to be wrong. Use your imagination. Find some cheap legs, on both sides. Spread it to either direction. So you could say, hey, if this continues on, oil is way higher, wheat's going to go higher. I like this $8 call for, these shorter time frames, which you like, I think are going to pay. You might not have to time it. Just think of interesting ways to play this. Like I say, both sides, buy put, buy call, try to find the one that's going to move the most, if this happens, and the one that's going to move most to the downside if this happens. And I think that you'll find that there's probably some opportunity even when you don't know the direction.
Right. Well, John, you're getting calls. I just got like 4 texts in a row. We should probably wrap it up.
Yeah. And we promise that it will be, like I say, there will be more kind of decisive talk, and we'll dive into the numbers a little bit more. But hey, we're about ready to start planting this thing. We got they're going to quit talking about old crop here very soon. And we have a whole new year ahead of us for the grains.
I cannot wait till we get to the heat dome.
Yeah, the heat dome death talk has died down a little bit. It was hot, but there's a lot of rain everywhere now. It's tamped that down a little bit.
I drove for 12 hours last Thursday.
Yep.
And had the wipers on high right up until we hit the ice an hour from home. So it was either pouring rain or ice.
Yeah, it's there's a lot of moisture where it needed to fall. So the drought talk's going to be put on the back burner, but don't worry, that's coming back. And give it 10 days, it'll be right back.
I also just need to add one other road trip observation.
What's that?
Through Indiana, mostly Illinois, the farms along the roads, they all have like their own little lake.
Oh, really?
And half of them have pontoons on them. And it's amazing. I'm like, I want that little, it looks like it's set up just to water ski down and back on, but then it will just be a pontoon sitting at a dock.
Are there pontoons already on the lake there?
Oh, yeah.
We still have ice. There's no pontoon.
I guarantee you they did not take them out.
No, they probably didn't.
So anyway, let's wrap it up there, John. Leave your number.
218-731-1578.
Thanks, John.
Yep.